Hey, welcome back, everyone. I hope you're all doing fine and well today. So it's another week, but before we jump straight into next week, all right, I want us to talk about what happened last week. Okay, this is the weekend. Okay, we're in between next week and last week. So let's talk about what happened last week. So last week we had the main refinancing rate in the United States, we had in Canada, we had in the United Kingdom. I think we also had something like main refinancing rates or bank rates in Japan as well. Although let's start from Japan. Okay, what happened in Japan? Last week, the Bank of Japan decided to leave or they left their policy rate unchanged. Okay, they are still moderately watching the economy, how it's approaching, and how majorly the key point of the Bank of Japan governor, the key points that he kind of like iterated mostly or majorly about is the uncertainties that surround the tariff. So the tariff is still not very, very clear on how it's going to impact the Japanese economy. As a matter of fact, let's take a look at the Japan economic heat map right here. So if you're looking at it right here, all right, you will see that the economy is still going through a little bit of, I won't say stagnancy. Okay, you can see in the, excuse me, yeah, in the inflationary part of the economy, or let's just say inflation part of the economy, we have the retail sales year and year, we have the CPI, and we have the PPI. You can see right here, everything still looks stagnant. Okay, like it's more like a stagnation what they're experiencing right there. Something very similar to what the United Kingdom is going through as well. Okay, you can see the last data. I think September 18th they released CPI year in Japan, and it came out, slightly below slightly below previous. However, when you take a look at the PPI year on year, it's more like the same. Okay, so the CPI from the consumer perspective, inflation is slowing down, which is very good for the economy, but it's very awful for the currency. And also with and then the story behind Governor Ueda, I'm not sure if I pronounced that very well, retiring or getting fired or resigning. I don't really know what it is, but he said he's resigning. I don't know why someone would leave that kind of very fancy job. Okay, but he's resigning, so let's go with that. So I don't know why he's resigning, but he's resigning, and they are gonna be bringing another person to take his place. So that uncertainty is alone. It's like imagine Fred saying that he's resigned. He's going to resign. Although I know Donald Trump would be so happy if that happened, for sure. Well, I don't think Jerome Powell would do that to us because we like Jerome Powell. Come on. I mean, look at what happened on Wednesday. It was fabulous. We're going to talk about that. But when you take a back to where I was coming from, when you take a look at the Japanese economy or Japan economy, I think it is still mildly decent. Okay, even though the currency impact is not looking very good. But when you take a look at the economy itself, the stock impact, it is very decent. Okay, inflation is slowing down, pretty sticky, but it's slowing down. Okay, especially the CPI. And the retail sales is also slowing down, meaning, boom, people are not buying stuff again. Okay, people are not buying stuff again. All right, probably because the GDP is also not looking very nice. Okay, although it got increased from 0.3% that the market is forecasting, but when you compare it with the service PMI, when you compare it with the manufacturing size, okay, the scale of manufacturing companies in Japan, and they have such growth at 0.5%, it doesn't tally. Okay, possibly that is why. And when you have the GDP growth this low, definitely it's going to discourage retail sales. Meaning, people will not be able to afford money. Definitely, the employment rate is also going to be affected, as you can see right there. Okay, so the labor market is affected in Japan. Unemployment rate is slowing down, but then people are still losing their job. All right, because unemployment rate is slowing down doesn't mean people stop losing job, especially when it comes to people probably getting fired, or probably just like again the governor of Bank of Japan resigning. I mean, it's one of those things, right? So, but on a more serious note, I think the Japanese economy is not doing very well. However, it is not bad either. But when you look at the currency aspect of the economy, it is awful, and that is why some of my trades I'm buying some pairs against the Japanese yen. So that said, let's go back to the US dollar. I think Japan and US they kind of had the spotlight last week when it comes to the rate decision. Yes, and also Canada. I want us to talk about the dollar last. So let's take a look at the Canadian economy as well. So right here on Canada, okay, we have the update in September, blah, blah, blah. The Bank of Canada cut its policy rate to 2.5%. So they decided to cut 25 basis points. Now, why would they do that? Number one, okay, the labor data is not looking very good at all. Okay, employment decline, rising in unemployment rate remain very dominant in Canada right now. Okay, so why trying to ease off on the on the labor market, trying to see when you cut rates, definitely companies would be eager to employ more people, and the moment they start employing people, retail sales will go up, inflation will go up, which will definitely increase the currency, okay, the strength of the Canadian dollar itself. Okay, people will get more job, livelihood will be good, real estate will make sense, all right. So the economy in general will make sense just because they decided to start cutting rates. Although if they cut rates too much, okay, it's still going to affect because there will be crazy inflation. So they have to be very cautious right now. But the major point that inflation, major reason why I think the Bank of Canada decided to cut their rates is because of the labor data that is getting smashed in the face. Okay, so it is quite weird over there. It is very, very poor. So now I'm still very, very, very bearish on the CAD. You can see right here, it is still very bearish, all right? So when we take a look at the CAD economic heat map itself, let's take a look at that before we go to the dollar, all right? I mean, we started the video already, so let's keep going. So look at this itself. It is very, very poor, all right? It is very poor. The GDP growth is terrible, okay? It's, as a matter of fact, when we checked Japanese yen earlier, we said they're at 0.5%, okay? The month-on-month GDP growth. So that is quite bad, but at the same time, it got increased, okay, which was good for the currency and probably good for the economy itself because from 0.3 they go increased to 0.5. But when you consider the size of Japanese economy, it is not good, okay. 0.5 is still very, very bad, all right. So we have to pay close attention to that. But when you now look at the Canadian economy itself, you can see that even from 0.1%, the market is forecasting 0.1%, and we got 0.1%. Literally means that there is no growth in Canada at all. Okay, there is no growth. They're like stagnant. The same thing is happening in what's it called again in UK when they have 0.0% for their GDP growth. There's no growth in the economy. That means the level of export and import is kind of like just kind of balanced. Like there's no increments, there's no decrease. Then definitely the retail sector is also gonna get impacted, and everything will just get probably messed up. All right. So when you take a look at the inflationary data also here, you can see the retail sales is still at 1%. Now they have retail sales because 1% of interest rate is very good. Actually, it was from 1.5%, but 1 is still very good for the economy. But when you now compare what we actually got from the previous, which is 1.5%, it's also slowing down. That is also terrible. Okay, and I told you last week that I was buying USD against CAD, even when the dollar itself is very, very weak. All right, I was still considering the weak dollar will still overpower an extremely weak CAD. All right, so that is why I'm still holding that UCAD trade anyway. So I'm going to show you when we jump into the chart. So taking a look at this, look at the labor market. Okay, in Canada. Okay, so unemployment rate is now at 7.1%. 7.1%. That is crazy. That means people are losing job very fast. And when you come back here again, I think we talked about this earlier when I said the employment decline and rising unemployment remain the dominant theme. Okay, the dominant theme. That is why it is expedient that the Bank of Canada cut that rate in peace. As a matter of fact, I would argue that they should cut more than 25 basis points that it actually did cut. But I think it's an easy process. They can't do it too much, so it won't cause a global crazy inflation in the economy. Although I think they had some very good inflationary data. Yeah, I think they still have this inflation on lock. All right, they have 2.6%. Even the inflation is still going up. All right, but that is very good. I mean, on the producer part, or them saying manufacturing part, all right, it's still going up 2.6% from 1.9%. Still going up. But when you look at the CPI, it is very mild, 1.9%. So the target is still 2%. So they are still on point on the inflationary aspect. Okay, on the inflation, yeah, literally inflationary part of the economy, they're still very good on that aspect. Okay, on that front. But the labor market and the economic growth is terrible. So they have to now find a way to make this come up. All right, at least find a borderline for the labor data. And by so doing, with the rate cut, I think it's gonna help the GDP growth. It's gonna help the service PMI, all right, and they're probably gonna help the manufacturing PMI. As well as they don't really have a terrible manufacturing PMI, but at the same time, it's not good because I mean, even though it came quite higher, the last time it was released, okay, by 2.2, but still, it's still very low. Okay, I said it last week that anything below 50 for the service PMI and manufacturing PMI is very, 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 very low. So that is that on the Canadian economy. All right, I don't want to spend so much time here, but I mean you all should understand that this is very, very important to talk about. Now to the almighty United States of America. Okay, So don't forget, last week I said I am largely bearish on the dollar. But when you take a look at the chart on Wednesday, Thursday, Friday, okay, we first got a very, very crazy, from Monday, Tuesday, we got a very, let's look at the chart before I come back here. All right, on the US dollar, let's take a look at the US dollar. This is the daily time frame, don't forget, please. So now on the dollar, yeah, this is the United States dollar. Don't forget that I said that we would likely get this particular region we tested, which is 96.50. And we got it. As a matter of fact, it dipped even further on Wednesday. It dipped further to 96.2 right here. Okay, it dipped further down, which is very good. Why? Because there was a whipsaw effect after the Fed cut 25 basis points. Now, some people would argue that they should have cut 50%. As a matter of fact, one of the Fed voted for 50 basis points cut. But I don't really see why they should go ahead and do that, because the tariff inflation is still a significant deals that they have to battle with as time goes on. So nothing is very clear yet on how the tariff is going to impact the US economy. Okay, they're still trying to factor everything into space and put everything in place to make sure the consumer price index is not too crazy, and the producer price index is also not too crazy, because when you have high inflation in your hands, then you need to start hiking rate again, and the inflation rate is already way too high. You get what I'm saying now? And despite the rate hike and rate cut, dollar is still very bearish. And now the labor market is not bad. Okay, so it has to be. You have to do it. It's just like poem, kind of like sum everything up. He said it's the rate cut that happened on Wednesday was a risk management rate cut, and I really dig that, because now they have to manage the risky market they have on their hands. Okay, they've got to manage it. Failure to do that, it might get pretty worse, because we have the US president still going at calling on all his partners to to start pushing a lot of tariff and sanction on Russia, China, and India. I mean, China and India, most especially because Russia is always sanctioned by all of this Western whatever. Okay, so it's a lot of pressure on the Fed and the dollar itself. So when the Fed now end up cutting rates, you can see what happened on Wednesday, Thursday, Friday. You can see this right. So you might be confused, or you might ask that, yes, the Fed cut rates. All right, why are we now seeing a stronger dollar? If the Fed cut rate in the fundamentals 101, okay, when we're studying fundamentals, when we're just learning how to trade, fundamental 101, we learn that when they cut rate, is not good for the currency. Okay, when they hike rate, it is good for the currency. Okay, even in Forex Factory, let's take a look at the Forex Factory. All right, I want us to really, really deep dive. Really dive into this thing. So now, take a look at the SNB, Swiss National Bank. Swiss National Bank policy rate. They're planning not to cut rate. Okay, so look at this usual effect. Okay, because this is the fundamental one I was talking about. The actual greater than forecast is good for the currency, meaning the opposite of that is what is bad for the currency. That's what it means. And that is the usual effect that most of us kind of like get accustomed to when we're learning how to trade the Forex market, quote unquote, especially for some of us that are learning from YouTube. Okay, that's what anybody will tell you, because they don't really have the time to go into deal details. This is what happened when they cut rate. Sometime it might go up, sometime it might not go up. It will be crazy. Okay, you will get bored. Believe me, you will get bored. All right. So what happens most of the time when the Fed cut rate is, and what most beginners, even most gurus, okay, I'm talking about experienced traders, don't really take note of or even speak about, is about the projection. Okay, this thing right here. Okay, the Fed stance and the projection. Because now, when they cut rate, as a matter of fact, the effect of the rate cut happened. I started a very long time ago. When Powell, during the symposium, the Jackson Hole symposium, okay, Powell came out and said there is a high possibility that they're going to cut rate. And we saw the effect already. Okay, started coming down, and so many analysts started coming out and be like, yeah, we're going to cut rate, they might cut rate, 25 basis points, 50 basis points, blah, 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 blah. Everybody's already getting ready. Okay, everybody's adjusting. It's just like, when they talk about it, something has been priced in the market, you might be like, that's another way of them lying to us. But let's put it in this perspective. Okay, if you have your mom coming from the village, you're a married man, or maybe you are a single guy, just like me, all right, and your mom is coming to visit you, okay, would you wait for her to be in your house before you start preparing where she's going to be, where she's going to stay, all right, the food she's going to eat, how you're going to take care of her, and every other thing. Would you wait till she gets to your house? Or you'd have been planning ahead for it? Think about that. That is how the fundamental also look like. The moment there is a forecast, it's already been priced in. People are already preparing. The effect has already taken place. Now, when the actual now comes, now what I'm saying is the fact that it's been priced in doesn't mean that's the end of life. When the data actually comes, again, there will be some effect, but it won't be, especially if it comes as forecasted, you won't see the immediate effect. Okay, but as time goes on, it's a futuristic, it's more like a plan for and a futuristic effect. When it comes to fundamental, it is a lot. That's why so many people don't like it. They rather just run away from it. And I did that for a long time in my life, but then I think God is very important. I'm taking time to do all of this with all my gesticulation because I think it just makes sense that we all get accustomed to this thing. So many of us, I have so many students. I mean, pretty much so many students that they love trading. Their technical analysis is so top notch, but the fundamental is what they don't really get yet. That is putting them in that kind of confinement that they've not really gotten that level of, it's not really gotten to that level of, making the real money of Lamborghini kind of money in the market. I've not really made my own Lamborghini kind of money anyways. But at the end of the day, you need to understand fundamentals. Okay, technical alone cannot do the trick. So now, all of that said, okay, I'm not sure if you understand what I'm saying, but I hope you do. So now let's talk about the projection. Yes, the federal funds rate the Fed cut the federal funds rate by 25 basis points on September 17th, bringing it down to what? 4.25%. From 4.5%. The first reduction since December 2024, okay, since December 2024. Now, Governor Stephen Miran dissented and he favored 50 basis points on 17. But, we have more people that are like, we're not too bad. Let's take this thing slow. And I learned that this governor, okay, this new governor is just being introduced to the committee finally. So I think maybe he got into the Trump cycle and Trump was like, bro, you gotta cut rates 50 basis points, okay? Maybe he got a tweet maybe he was a big fan of Trump, was reading all his tweets and everything like that. I'm just kidding, guys. Okay. But whatever the case may be, we ended up the Fed ended up cutting 25 basis points, which is actually very decent. Okay, the FOMC statement emphasized promoting maximum employment and stable prices. That is, don't forget, the first and the primary assignment of the Fed is not to trade the forex market. They don't care. It's to stabilize the US economy. Okay, that is the primary assignment, to stabilize the US economy by making use of all these factors, inflation, the labor market, every other thing. They make use of those indicators just to do one thing, to stabilize the economy. They need stability and to maximize all these concepts, all these things. Okay, to do one thing, stabilize the economy. Once they have a stable economy, then they can keep going on with the business. So, with a caution approach due to tariff-driven inflation risk, like I said earlier, the tariff-driven inflation risk is very good. It's paramount. Okay, it's something that has to be cautiously watched because at this point, the tariff inflation is still yet to be fully engrossed into the market, in my own opinion. Because at this point, once we actually get yes, this is tariff. I'm not sure if you're ever going to get it. Yes, this is tariff-driven inflation because before tariff can take effect, I read a report that analysts forecasted 6 to 8 months or even a year before tariff actually gets to take the full the big effect. And don't forget, we have Trump for the next 4 years. Okay, we have Trump to 2029. If I'm not mistaken, that's 2025, next 4 years. Yeah. So it will be in our lifetime that we're going to experience that. So we have to be ready. So the Fed has to prepare. Like I said again, when you are expecting your mom or any visitor at all, you have to start preparing right now. Not until the day that the tariff inflation and the tariff-driven inflation actually comes in. That you have to have, okay, what do we do? Should we call 25 basis points? Should we call 80,000 basis points? No, you have to start preparing for it. That's why the Fed they aired on till now before they ended up cutting rates. Although by so doing, while they were holding on, the inflation is actually slowing down, but the labor market is the one getting all the pressure. Okay, people are getting laid off. People were retiring, people were getting fired, people were actually resigning. Okay, that's what we get from the the weekly report on the job data. That's the initial jobless claim. People that get laid off, people that get fired, okay, stuff like that. Okay, laid off, fired, same people that actually quit also. Some people probably leave their job like, I'm not interested anymore. So those are the data that got affected the most. Okay, because the Fed decided not to cut rates since December 2024. So the projection now is the Fed is easing gradually, with projection of another 50 basis points cut by the end of the year, 2025, and 25 basis points cut in 2026. Policy remains data-driven, balancing resilient growth and inflation above 2% target. Okay, so the inflation is still above 2% target. We all know that, okay, from what we have right here on the US economy. But I don't really want us to talk about this for now. Let's still kind of just perfectly talk about what we're saying here. Then we go back to the US economic heat map, then we jump straight into the chat. We are done with the economic story today. I think we've done enough. All right. So projection rates projected at 2.6% in 2025 and 30.1% in 2026, with GDP growth at 1.6% for 2025, up from 1.4%. PC is also projected to be at 3%. Okay, these are the projections. And when you look at this projection, it shows one thing, that the Fed is what is easing gradually. Okay, quantitative easing. Okay, they are easing gradually. They've projected that yes, by the time they're done with all of this, labor data would have probably recuperated. And we saw what happened last week. Okay, with the initial jobless claim that came out last week, you can see right here, initial jobless claim came out quite below what was being forecasted. That is very good. Okay, so the labor data slowly might start getting their footing gradually, and you can see the growth we saw last week is at 50%. Okay, we saw inflation at 0, and we saw job at 0. Okay, that left US dollar at 30, I think 33% right here, and the stock market at maybe 25%, something like that. But since we got the data, the retail sales month to month, these are data we got last week. We got retail sales month to month, we got initial jobless claim, and we got the main refinancing rate, okay, from the Fed, okay, interest rate literally, okay. So we got those data and they came very good, okay, and the projection was also very good. That's why we are getting this interesting, like I said, data driven, okay. We're getting this reading on the dollar right now. You can see the quarterly GDP is still at 3.3%, which is not bad at all. Okay, so the Fed is still expecting additional of maybe 1.4 to 1.3%. Okay, that's the annual GDP though, but this one right here is 3.3. So this comes every quarter. So potentially we're going to get, a more robust economy as time goes on. Okay, by the time those monies start coming, those tariff money start coming in, and the consumer are spending it out. So it's like an exchange from the consumer to the federal government. So it just keep going like that. Just kidding. All right. So GDP growth, we're looking at the data itself. GDP growth looks very good. Okay. I mean, so far so good. We also got service PMI looks very good. So the growth is still very tight. And then another data that I got to find out that is also kind of considered as a growth in the United States is the retail sales. All right, it's not just an inflationary data, it's also a growth data. So we have the GDP, we have the manufacturing PMI, we have the service PMI, and we have the retail sales month for month. You can see all this data that looks very good. Okay, looks very, very good. Okay, so from 0.5%, which was previous, the market was even forecasting something that they're forecasting that, they're pressing it down, that people will not have that much enough money. I mean, they won't have enough money to get some stuff done. But in the United States, there's still money to push around, and everything still looks very good. 0.6%, 0.6 is not very bad at all. Inflation is still pretty sticky. CPI, PPI, PCE is still very, very sticky. 2.9, 2.6, 2.9. Okay, and that's why we read right here that they said growth, resilient growth, and inflation above the 2%. So inflation is still pretty much above 2%, which is the forecast of the Fed. All right. And lastly, when you take a look at the unemployment rate, still pretty sticky, pretty decent. No increment, no decrement so far since we got it last, a couple of weeks back. All right, the just job opening, the ADP and non-farm payroll. I'm very sure when all of this will be coming out next, I think in the next 2 weeks, I'm very sure it will not be this bad. I'm trying to just stretch a little bit, but let's see how next week goes. I think we only have next week left out of this month, and maybe half of the week after that, then we get the NFP. All right, so we have to watch how this all unravels. But overall, the dollar itself is coming back up. You can even see the US stock market is now going up. All right, which kind of take me to my trade. The one trade I took last time. Okay, where is this NASDAQ? I think the trade is on NASDAQ. Where is NASDAQ again? Okay, I just want to branch a little bit. This is NASDAQ. I took this buy trade. I'm not sure if you remember. I took this buy trade on NASDAQ, and bro, I closed it around here. I closed the trade when the market was correcting back to this trade. That's when my trading stopped. And since then, it was never suggested in Edge Finder. I just kind of just take my eyes off it. But I never deleted this thing. And look at where the market is right now. I think I am good. Just kidding, guys. So that is just a very big blow to my personal face. All right. But I mean, it's part of the deal. Okay, it's part of the deal. So literally, if you ask me where am I leaning right now on DXY, I will tell you that I'm leaning quite bullish to neutral. Okay, bullish to neutral. Okay, this rejection from, now we're back to the chart, all right? This rejection from this particular region right here that got seriously retested, okay, is telling me a lot of stories. We checked the data earlier. Okay, we checked this US economic heat map earlier, and you can see what we have right here. It looks very good. Okay, it looks moderately good. Okay, I don't want to say very good because it's still not the best because of the labor data that is still pretty flat, and inflation is also pretty flat. Okay, but when you look at the growth is coming up gradually. Inflation is still pretty sticky, so we don't really have anything on that. And labor market is also coming up very, I mean, it's coming up quite decent. Okay, so we have to pay close attention to all of this. Okay, like I said, the Fed even called the market data driven. So you've got to also make use of data in your analysis, in your approach as we jump straight into this new week. All right. So what is my view on the dollar right now? I think it is very simple. Okay. I would expect a further rally to the upside, at least back to this 98.50. Okay. Back to this 98.50 region. If we get a retest of this particular high, because I'm very sure there is a supply around there, all right, we might get a little bit of a drop, then further to the upside. It's very possible. Okay, it is very possible. Provided that the remaining dollar data that we have coming this week, which would be, I think, the PMIs, I guess, right? We have the flash manufacturing PMI and the flash service PMI. If they all came, they're forecasted down. They're all forecasted to come lower than expected. I mean, lower than forecast. So if it does something quite higher than both of these, okay, yeah, we can get some very decent readings, okay, or a bullish move on the dollar. Also on Thursday we have the aside the Swiss National Bank that they plan also cut rate or even hike it, they are pretty flat. They don't really have any interest rates in Switzerland right now, so we are not going to pay close attention to that anyways. Because Swiss is actually very strong, so keep your mind on that. Now, in the United States, we have final GDP and unemployment claim. Again, okay, the market is forecasting an increment of 4,000 on the initial jobless claim, or let's just say unemployment claims. But we will get a smaller reading again, which would definitely help the dollar. And then we also have the final GDP, the quarterly GDP, coming by 130 on Thursday again. If we have anything above 30.3%, maybe we have 30.5%, again, all this data would really, really help the dollar to move up. Okay, it would really, really help the dollar to move up very, very nicely. So now back to the chart fully. Based on the data that I've just analyzed with you, analyzed for you, okay, I think we have a chance for a further rally on the dollar. Okay, so let's pay close attention to that. However, it is still very weak. All right, the dollar is not strong at all, still very weak. But on a midterm on a midterm perspective, I would say we might likely see a rally, probably towards this 100 region right here. Okay, this particular supply. So pay close attention to that on the dollar. All right. Power adventure. If any of those data that I just itemized earlier, okay, I'm talking about the service PMI and the manufacturing PMI right here. I'm talking about the final GDP and the unemployment rate. If any of these data came out very poor for the dollar, let's go back to the chart. Now. It is going to be very devastating for the dollar because we now might get a further drop. Like I said, it's pretty bearish. So you have to pay close attention to the data this week. You don't have any real choice unless you don't want to trade the dollar pair, and that would also be fine. Okay. So that said, on the economy and everything involved. So I mean, it's a week for you to get ready for. Okay. So taking a look at the top setup right this week, we have Aussie yen. I'm buying Aussie yen ready. Pound yen. I'm also buying pound yen, but it is a painful buy because I'm in the drawdown right now. I'm buying USD CAD. I'm buying USD CHF. Okay, USD CHF is actually making so much money right now. It looks very, very good. USD CAD made so much money on Wednesday, Thursday, and on Friday just dropped. I don't know why, but it kind of just dropped. I'm going to show you on the chart as time goes on. CHF JPY did very well. As a matter of fact, I just added a new buy to my CHF JPY trade, so it looks really good. Aussie CAD, I have a trade set up on it, but I'm not sure if this is actually very cool because it came all the way from the top. It came from like 11 score all the way down to 5. So that is not a very good feeling for me on Audcad. And it's not my very fancy pair. It's not the kind of pair that I go to trade all the time. But let's pay close attention to that. I see Euro GBP back on bearish. and I like it, but I need maybe -6 or -7 before I can take a trade on EURGBP because it's a terrible pair. Okay, if you have another choice to take any trade, don't trade EURGBP. Just go for any other option. EURGBP, Audcad, Card, they're terrible pairs. Okay, based on one personal opinion though. So gold is also very bullish. Now we're gonna take a look into that. But I think gold is probably trying to trap buyers right now. I don't want to be part of it. I took my last buy on silver, so now fully back to the chart. I took my last buy on silver. Where are you, silver? You little silver. So I took my last buy on silver and it was amazing. It was amazing. So right now I ain't got nothing on silver. I ain't got nothing on. I have something on gold. This is part of my trade recommendation. But silver, I'm pretty flat on it. I don't care if it likes to bounce to 500 right now. I will say bye bye because it has really done so well for me this month. So far, it's been awesome. Okay, I started buying silver right here. I took another buy right here, and I took another buy right here. So I had like 3 major buys of silver, and all of them was really, none of them was below 700 pips. I'm gonna tell you that none of them is below 700 pips. Some, I think I closed 1,400. I closed 1,320, and then this particular one I actually closed it up over here. I closed around maybe 800 or so. So it was really good on silver for me personally. So silver is good. So I'm gonna leave it alone for like maybe a month or two to know what is gonna happen, then go back to silver again. You can also see on Edgefinder, silver should be reading pretty neutral. I'm very sure of that. Where is this? Where is gold and silver? So we're gonna come back there later. So once that actually come up. All right. So back to my chart. I told you I'm buying CHF So Swiss yen, I took a buy somewhere around here. I think I started buying Swiss yen around here. I told you all about this. I mean, I shared a very detailed information about this trade with you last week. So that's part of it. So now it has broken this particular high right here. It has broken this high right here. Okay, this particular resistance, that's one by high. Okay, it's been broken decently. Now it seems to be going back down. All right, I have my trading stop right here. Okay, for this particular trade, if it tap me out, fine. However, I have a fresh new buy around that region at the top there. So let me change it to 4 hour time frame right now. So you can see I have a fresh new buy around this region. Did very well. Now it's going back down. Let's see how that goes. Okay, my stop loss is slightly below here. So if I get tapped out, I will take that loss like a charm there. Yeah. However, I'm quite bullish on this one. Okay, don't forget that the Japanese yen economy is not super strong, and we also talked about Swiss National Bank leaving their rate of change. So nothing that's actually really changed on the Switzerland front so far this week and last week. Even this week, nothing really coming out for them. So I think I'm still pretty bullish on Swiss, but Japanese yen, I'm very, very skeptic about it. So paying close attention to this very, very well. All right, so I'm still trying to get you the silver reading on Edgefinder, but for now, let's talk about USD CAD. On USD CAD, like I told you, I was buying USD CAD, and that massive drop happened. I think I can attack this. Well, let me say I can. I don't know. I don't really know. I can't really trace this like that. I want to trace it to the fundamental that came for the Canadian dollar last week, but I'm not really sure if that really had anything serious to play in it, any serious part to play in it. But anyway, this drop happened and it was very devastating. Okay. However, I have my trading stop right here. Get another drop, I might have to this trade. Okay. But let's just see how this goes. This is a very nice trade for me. All right. But it was also very slow, very, very slow in my personal opinion. But I have two positions, one here and the second one here. So if we get this, fine. If not, I will just stay away from this. If you want to join this trade, please, please, and please only join this trade if you get, if you see a nice and decent break above this region and a pullback, okay, you can add to this position, okay, or just join right here. If it drop back down here, you can also pick the trade, okay. You can see something like this happen before. Okay, you can see this red candle right here. Okay, you can see this red candle, and then the market just went up right there. Even after a while, there's still another massive drop. Okay, CAD is also very, very volatile in a way. So it is very tough to trail this pair because it just keep tapping you out and then keep going back to the upside in your direction. So you just have to watch out very, very well on USD CAD. But for me, I will keep watch, and don't forget again, break above there, a pull back to retesting this 1.3790. Okay, would be a very good place for you to buy. And probably target 1.3940 thereabout. Okay, it's a very good place to target around maybe 125, 140, or maybe 200 pips thereabout. All right, so that's my take on USD CAD. Now back to see what I was talking about. I said I don't really have anything on it. You can see right now it's reading 1. Okay, pretty neutral. Nothing on this one right now for me. You can even see the put to call ratio now is at 1. meaning so many people will be looking to short this thing. Okay, so many people will be looking to short silver. So I'm not super interested in it on this one. So market sentiment again. Let's even check the retail sentiment on silver. Maybe I'm very sure we have so many retail guys that will be proud. They'll probably be buying silver right now. Oh, excuse me. Silver is not showing very well here, but we had. Can see retail sentiment. Good lord, they're selling gold like mad. Good lord, this is awful, man. This is awful. Anyways, that's that for them anyway. So silver, we have silver like 105% sellers. That's what's off. I mean, who does that? That was crazy. Let's just leave it at that. I'm not gonna touch silver right now. It is so crazy to even touch silver. So I'm gonna just stay with USDCHF again. I am buying USDCHF. Like I said, this one is much better than USDCAD. I took both of them at the same time. All right, and I took this at the back of this oversold right here. So where is my RSI? Okay, you can see that crazy oversold right there. So I took it just at the back of that oversold, and with this flag pattern right here, this very flag pattern, I'm just anticipating for a retest of this particular region. Maybe I will sell it off again. Okay, so if you want to trade this USDCHF, I would say that maybe wait for it to come here. Okay, take a sell, or maybe wait for it to probably rally back to this particular supply zone right here, and you can actually now take a sell all the way to the downside. But wait on this, okay? I'm not super sure about this thing I just told you. I wouldn't be selling USDCHF right now. So just watch out because of the dollar. Like I said again, dollar seems to be getting some traction fundamentally. So you want to be very careful on how you approach this USDCHF. But personally, if you get this pullback, if you want to buy, get a pullback, then you can actually buy to this region, and ultimately to this region right there. So I think this would be something I would probably recommend fully rather than selling USDCHF. If you understand what I'm saying. Don't forget, we have like 3 data coming this week. We have like 2 major data coming this week. Unemployment rate, unemployment claim and the quarterly GDP for the United States dollar. And they're coming on Thursday. So you want to watch how those data come and how they go. All right. So that said, ETH, I'm also buying Ethereum. Ethereum looks quite decent. Okay. I took it very well. It rallied back down and now it's rallying back up. I don't really know how to feel about Ethereum. If you want to take this trade, by the time you're watching the video, if you see below here, you can actually join. It looks very good. It's not so terrible. All right, it looks super cool. If you want to buy Ethereum, although if you don't want to buy Ethereum, you can buy Bitcoin because I have a setup on Bitcoin anyways. But if you look at Ethereum, it's retesting this particular support again. And you can see previously it was used as resistance. So how the buyers reacted or react to this particular region would be what make this pair to go up or this asset to go up or to come down. I guess if we get some very good demand right here, like so many investors coming to buy Ethereum, we'll probably see the retest of this all-time high, or maybe even this particular demand right here that is never gets investigated or something like that. All right, we have a zone right here. It might be demand, it might just be particular resistance or something, okay, but there's something right there that is just pretty like a gap to the downside. So if we get the market to retest this particular region, then we might get a slow to the downside. It's probably a retest of this particular all-time high right here at 4,980 something thereabout. Okay, so let's pay close attention to Ethereum. It looks really good in my opinion. Australian dollar, Japanese yen. Aussie yen is also very cool. Okay, I miss out on all of this rally. Okay, everything that happened right here, I miss out on it. Do I have any regrets? Definitely no. I don't have any. But right now, I just took a buy right here. It looks decent, although it's quite problematic. Okay, but it looks decent. I have a Fibonacci at 50%. I have an engulfing candlestick. It's retesting a probably very strong resistance using the support. Okay, so it looks on a mild, it looks mildly good. All right, I won't say it's the best because I would probably enjoy a more drop to the downside before I actually buy. Okay, but it looks mildly decent. Maybe the kind of pair I will have to the position as time goes on if it actually gets to the downside. But right now, I would say you can actually go and take a buy if you want to. Okay, also the RSI is not super at the bottom. Okay, I always love my RSI to be at the oversold, and my oversold is not the usual 30. Okay, it's at 25. Okay, so when you see my oversold, you should know that it's extremely oversold. So that's how I just set my RSI, and I have my overbought at 75, not the usual 70. Because you know what I'm trying to say. I just like the very edge, like giving that sniper entry kind of vibe. You know what I'm saying? So just pay attention to Aussie yen. It might be a very good one to join. GJ is terrible. Okay, I'm in the drawdown, and I'm going to explain something to you right now. When I took GJ, again, it's not my ideal kind of trade because I saw the entry, I saw the recommendation, I saw it on Edge Final Trade Top Seller. There, it looks good. I think around 7 plus score. Looks really good. And we have this particular region just dancing around. We've seen it dance around this particular region since August, since the middle of August. It's been bouncing around there, accumulating. Now, when you see pair like gold, silver, pound dollar, pound yen, I think Bitcoin, when you see those assets accumulating, by accumulating, I mean when you see them ranging, you want to really get ready. So this is how I trade my range. Quickly, let me see if I can do this before, because I'm literally out of time. So let me see if I can make this happen. When you see the market range for like 2 months, and then slowly you're seeing the market build up like this inside the range, all right, and it break out. That should literally tell you where the market is heading. Okay, so all you need is just a pullback, and then this is how I trade my breakout strategy. Okay, and that's exactly what I saw right here on DJ. Okay, you can see this momentum, right? Is leaning towards the upside, and I took it. Okay, pullback, I took it by that straight up, and it went up. It went up really nicely. I was posting it everywhere on my status. I was really happy. I was jubilating, and then the second day, doom. Now this is not just like the normal just drop. Okay, we have the Japanese yen, the Bank of Japan coming out saying, yeah, we're still very strong. They're kind of just dancing around, telling you all about their projection. Everything is just crazy. So we got this massive drop. So now, am I still bullish on JJ? Yes, of course, I'm still very bullish. Okay. So, but if you want to take this on pound yen, okay, on pound yen, you can still wait for it to come back to this region. Even we tested it, and you can actually anticipate for it. But just put your stop loss slightly below here. You don't need to go crazy and put it below here. But if you want to be quite conservative, you can put your stop loss below here. If not, just put it below here and take the trade around there and see if it runs very well. By the time that is happening for you, I will be in a lot of mess, in a lot of emotion. So as you're taking that trade, you're praying for me. All right, so that's that on GJ. Back to this bottom. All right, and push to the upside. If this happens, take the trade. If you don't want to take the trade, maybe you're still like on the fence that it might still drop further, then wait for it to break above here, pull back and take the trade. All right. But generally, I'm bullish on pound. That's just where I'm at right now. We've talked about silver. So silver was very good. I'm no more interested in silver at all. So that's that on silver. So now about my trade recommendation, let's quickly take a look at that. This video is going to be very long. So because of the fundamentals, we have to do it. We just have to do it. So Audcad looks very good for a buy. You can also see that on the RSI, it is all fully oversold. All right, leaning like it's currently been at 25.58 at the RSI. Okay, on the RSI at 25.5, that's very, very low. All right, so you get it to come back here to retest this 61.8 Fibonacci retracement level. You might actually go ahead and take it back. And don't forget on Edge Finder right here is also pretty bullish. Okay, it's actually been bullish for a while, like a long while. So you might look into that if that interests you. I'm not sure if I'll take the trade, but it looks very good. So take a look into that. Bitcoin. On Bitcoin, I think I am probably going to join buy next week. Okay, or maybe tomorrow on Sunday if I get a retest of this particular area. Actually, I have a buy limit order there. So if I get it, I'm going to take this buy right there. My stop loss is going to be slightly below it. I mean below here. Or I might even be generous and put it right there. Based on my risk management anyways. Okay, it's not going to be just because I want to say it. All right, but if you take a look at this very well and if you're really interested in it, okay, we have two approach on Bitcoin. We have one here, you can take a buy. All right, or we have the second one here, you can take a buy. So those are the two regions that you can buy Bitcoin from. Number one here, number two right here. So pay close attention to that. You can also see that the RSI is still quite not at oversold yet. So maybe just wait for it to come, probably around that 30 region, then we can look for buy on Bitcoin. So pay close attention to Bitcoin. It looks like it's ready to go. All right, it's what it is ready to go. Australian dollar, US dollar, although it is not recommended here on Edge Finder, but I'm still very bullish on Australian dollar because when you take a look at the Edge Finder right here, you see that Aussie dollar is still, it's more like the only pair that is pretty bullish right now. More like it, and yeah, we have pound also. So we have Australian dollar at 7%, and we have pound at 60%. So real quickly, let's take a look at the Australian economic heat map. Okay, so here you economic heat map right here. What do we have? Look at it. Okay, yes, the quarterly GDP is not looking very good because it's below 1%, but 0.6% is far greater than what we had previous and even what was forecasted. All right, so that is very good. The manufacturing PMI 53, brilliant. Service PMI 55.8, crazy good. Retail sales 1.2, amazing. All right, CPI 2.1, very, very close to what this is very funny. Very, very close to target. 2.1 is very good, and you can see that it got reduced. I mean, it slightly got reduced from 2.2% and 2.4%, which is very good for the economy, by the way, but not very good for the currency. So I would say the slight reduction in Australian dollar comes from the inflation, okay, because it got reduced. Even the PPI also got reduced by 0.3%. But all this reduction is very good for the economy, but it's not good for the currency. I think that's the reduction we got. All right. But generally, the unemployment rate still looks very good. 4.2% is good. And then the employment change, I think generally, globally, I think the labor data in the global market now is very crazy. Probably because of the AIs and everything like that. I can't really say. Okay, but I think it's getting messed up in Japan, in Canada, in US, in Australia, in New Zealand, everything's okay. All right. So I guess that might be the cost. But anyways, you can see the labor data is actually bad for both economy and currency. So that's just a but on the general on my general overview, when it comes to the growth, and we have the GDP, manufacturing, service, retail sales, and the inflation. All right, they're all very good. All right, although the labor data is not very good, so they don't have the labor data. Maybe let's say the labor data is like maybe 20%. Inflation is at maybe slightly 50%. The growth is like around 75%. So largely still very bullish, right, on Australian dollar. So as an economy though, so taking a look at Aussie dollar, I think we might get a full retest of this particular region. Okay, maybe we get a push to this downside, and then the market will just ride it back to the upside. Okay, I'm not sure. It's not on edge finder yet, but on a personal technical perspective, that I'm not going to use fundamental at all. This is how I would love to take it. Okay, and don't forget that the RSI is also very leaning towards oversold. It's actually at oversold already because it's at 31.55. So on a general view of RSI, is already at oversold right there. So I mean, it is just very good for the buy. So pay close attention to that if you're interested. And on Com50, I'm also leaning to buy this one. Okay, but I want to see a full pullback first off. Okay, back to this particular region. All right, I would back to this resistance. Okay, I wanted to use this resistance support, although it kind of uses that support right there slightly before it bounce up. But I want to see a full retest. Okay, and then I will buy from there personally. Don't forget, I told you about the range. Push to the upside. I want to see a 9 and decent pullback, like equally pullback, and then we now buy on Com50. If you're interested in indices, that might be a shot for you. And the WTI, I don't really think I have anything on the WTI for now, so I'm going to just pause off the WTI, but it's quite bearish. Right? I'm leaving all of this there because I have a very tiny position on it, but nothing really fancy on the WTI. I'm not interested in this. Awesome. So guys, that is all from me to you today. Have a beautiful week. Okay, don't get margin call, protect your capital at all costs, and don't forget to subscribe to my YouTube channel. I'll see you in the next one. Have a good day.